Imagine this. You're a U.S. citizen, maybe, or a resident. Perhaps you lived overseas for a bit, worked there, inherited some money from family back home.
Or maybe just held on to some investment in another country for a while.
Right. And you think you're doing everything by the book, paying your taxes, keeping things straight. And then, bam, you find out you could be staring down the barrel of massive penalties, tens, hundreds of thousands of dollars, maybe even criminal charges.
And not for dodging taxes, necessarily.
No, just for not filing one single form. A form you maybe didn't even know existed, that form. The FBAR.
Oh.
Welcome to the deep dive. This is where we take complex topics, grab a whole stack of sources, and pull out the essential insights, the stuff you really need to know.
And today we are definitely diving deep into the U.S. Foreign Bank Account Report. You hear it called the FBAR all the time.
Our mission here is to figure out, what is this FBAR thing? Who actually has to file it? Because it seems broader than people think.
Yeah, and what are the common traps, the pitfalls that catch people out? How is it different from, say, FTP Form 8938? That's another confusing one.
And maybe most importantly, what are the recent court cases telling us? Because the ground seems to be shifting here, and the consequences of getting it wrong are, well, serious.
Extremely serious. So yeah, this is a really critical piece of reporting for anyone with financial ties overseas.
Let's unpack this.
Let's do it.
Okay, so let's just start at the beginning. FBAR. What does it actually stand for? And which part of the government are we talking about here? Is it an IRS thing?
Good question, because that's a common point of confusion. SBR stands for Foreign Bank Account Report. And while, yeah, it comes up a lot in tax discussions, it's technically not an IRS form you file with your tax return.
Oh, okay.
Its official name is FinCEN Form 114, and it's required by FinCEN, that's the Financial Crimes Enforcement Network.
FinCEN, right, part of Treasury.
Exactly, a bureau within the U.S. Department of the Treasury. But here's the twist. While FinCEN requires the form, the IRS is actually the agency that enforces the penalties if you don't file it.
Ah, okay. So Treasury requires it, IRS enforces it.
Yep.
Got it. And why? What's the big picture reason the government needs this form? Why track money overseas?
Well, it goes way back, actually, to 1970. There's a law called the Bank Secrecy Act, or BSA.
Okay.
And this was put in place because the government realized they needed better ways to track potential illegal money flows, things crossing borders.
Makes sense.
So the FBAR is basically one of the main tools under the BSA. The whole point is to help the government spot and investigate financial crimes, think tax evasion, money laundering, even terrorist financing.
Right.
By creating a paper trail, or I guess an electronic trail now, of where U.S. persons are holding assets outside the U.S. financial system. It's fundamentally about transparency.
Okay, transparency, law enforcement, that tracks. But let's bring it down to the individual listener. Who exactly counts as a U.S. person for FBIR? Is it just citizens living stateside?
No, and this is where a lot of people get tripped up. It's definitely broader. It absolutely includes U.S. citizens and U.S. residents living in the United States.
Standard stuff.
But crucially, it also includes U.S. citizens living abroad, expats. If you have a U.S. passport, doesn't matter where you live, you're a U.S. person for this.
Okay, that's a big group right there.
Huge. And it also includes lawful permanent residents, green card holders.
Right.
And it's not just people, U.S. entities too. Think corporations, partnerships, LLCs, trusts, estates. If they were formed under U.S. law, they're considered U.S. persons too, and might need to file if they have foreign accounts.
Wow. Okay, so a U.S. citizen in Paris, a green card holder in Florida with a Canadian account, a Delaware company with money in Ireland, all potentially caught by this.
Exactly. The who is very broad.
Okay, so the who is broad. Now, the trigger, the point where you actually have to file, there's a specific threshold, right? Related to these foreign accounts. What is it and how does it work?
This threshold is absolutely critical, and messing this up is probably one of the biggest mistakes people make. You have to file an FBAR if the aggregate value.
Aggregate meaning total.
Yes, the total value of all your foreign financial accounts added together, if that total exceeded $10,000
Okay.
at any point during the calendar year.
Any point, not just year end.
Not just year end. This is the killer detail. It's not the balance on December 31st. It's not the average. It's the highest value the total of all your accounts reached on any single day of the year.
Whoa. Okay, can you give an example? That sounds tricky.
Sure. Let's say you have, 3 foreign accounts. Account A hits a high of $4,000 in May. Account B peaks at $5,000 in August. Account C hits $3,000 in November.
Okay. None over $10 individually.
Right. But you have to look at the maximum value each account reached during the year, whenever that was, and add those maximums together. So $4,000 plus $5,000 plus $3,000, that's $12,000.
Ah, so even though the total might usually be lower because the sum of the peaks went over $10.
Bingo. Since $12,000 is over $10,000, you have to file an FBAR for that year. It doesn't matter if that peak only lasted for an hour. That one moment triggers the filing requirement for the whole year.
Wow. Okay, that at any point combined with aggregate makes it much easier to cross that line than you might think. What kinds of accounts are we talking about? Just regular checking and savings?
No, it's much wider than that.
Yeah.
Our sources are pretty clear.
Yes.
You need to count regular bank accounts, obviously checking, savings,
Right.
brokerage accounts holding stocks, bonds, whatever.
Okay.
Mutual funds or similar pooled funds if they're foreign.
Mm-hmm.
Pension accounts, maybe from a job overseas. Foreign life insurance, but only if it has a cash surrender value.
Ah, okay.
Trusts if you have a financial stake in them. Certain types of foreign retirement accounts too.
So basically, if it holds financial assets outside the U.S. with a foreign institution, you need to check it.
Pretty much. You need to evaluate it for that $10,000 aggregate test.
All right.
And it's not just about owning the account directly, is it? You mentioned financial interest and signature authority. That sounds important.
Hugely important because you might have to file even if the account isn't technically in your name.
Yeah.
You're required to file if you're a U.S. person and you have either a financial interest in the account.
Meaning you own it or benefit from it.
Right, owner of record, or maybe you're the beneficiary of a trust that holds the account, or it's held by a company you own. That's financial interest.
Okay.
Or if you have signature authority over the account.
And signature authority means?
It means you can control the money. You can tell the bank what to do with it, basically. Signing checks, transferring funds, making withdrawals, even if you're doing it with someone else. If you have that power, you have signature authority.
Can you give an example of where that might catch someone?
Sure. Classic example. Helping an elderly parent who lives overseas. Maybe they have accounts in their home country.
Right.
If you as a U.S. person get added to the account so you can pay their bills, or you get a power of attorney that lets you manage that foreign account.
Even if none of the money is actually yours.
Exactly. Even if it's 100% their money, your ability to control it gives you signature authority. And that signature authority alone could trigger your personal FBAR filing requirement if that account, plus any others you have interest or authority over, hits that $10,000 aggregate peak.
Wow. That's a huge trap for people helping family or maybe employees managing company accounts abroad.
Very common traps. It adds a whole different dimension beyond just, do I own this account?
Okay, so let's say you figured it out. You're a U.S. person. Your accounts cross that $10 aggregate threshold at some point. What's the deadline? When do you file this thing?
Okay, the FBAR FinCEN Form 114, it's filed annually based on the calendar year. The main deadline is April 15th of the following year.
So for 2023 accounts, the deadline was April 15th, 2024, same as tax day.
Same day, yes. But very important. Don't think filing your taxes covers the FBAR or that a tax extension covers it automatically. They are separate.
Right.
However, there is a bit of a cushion built in for the FBAR. If you miss that April 15th deadline, you automatically get an extension to October 15th. You don't even have to ask for it.
Oh, that's helpful. An automatic extension.
It is helpful, yeah. But here's the really critical point, and this trips people up too. October 15th is it. There are no more extensions for the FBAR beyond that date.
Unlike taxes, where sometimes you can get more time.
Exactly. For FBAR, October 15th is the absolute final drop-dead deadline. Miss that, and you're officially non-compliant, and that's where the penalty trouble starts.
Okay, so know the rules, hit the deadline. Sounds simple enough on the surface, but our sources really emphasize these common mistakes people make. Things that lead to non-compliance, often accidentally, and then, boom, big penalties.
Yeah, it's unfortunately easy to get wrong, even with the best intentions. There are several recurring pitfalls.
I guess the most basic one has to be just not knowing about it at all.
Absolutely. That's probably the number one reason for non-filing. So many U.S. persons, especially expats or people who inherit money from overseas later in life, they're just completely unaware this FBAR requirement even exists.
They might be filing U.S. taxes perfectly.
Right, using foreign tax credits, exclusions, everything seems fine. They genuinely believe they're compliant. But they miss this entirely separate reporting form required by FinCEN, not the IRS tax system directly.
And even if you do know about it, missing that October 15th deadline, That's another major issue.
Definitely. That automatic extension is nice, but it's still a deadline you have to remember. It falls outside the usual April tax crunch for many people, so it can get overlooked. And like we said, miss October 15th, and there's no further grace.
We talked about the types of accounts earlier, bank, brokerage, pension, etc. But forgetting to include all of them must be another easy way to mess up.
Very easy. People might report their main foreign bank account, but totally forget about, say, a smaller brokerage account, or that pension plan from a job they had in London 10 years ago, or maybe a life insurance policy overseas that's built up some cash value.
And since it's the aggregate value.
Exactly. Leaving out even one account could mean your calculation of the total value is wrong. You might think you're under the $10,000 threshold when, if you'd included everything, you were actually over it and needed to file.
Okay, this next one you've hit on a few times, but it seems so fundamental. Filing isn't tied to owing U.S. tax.
This is a huge, huge stumbling block. The FBAR is about reporting under the Bank Secrecy Act. It has nothing to do with whether you owe U.S. income tax.
Zero connection.
Zero. Your foreign income might be zero or taxed entirely in another country or covered by treaties or exclusions. Doesn't matter for FBAR. If you're a U.S. person and your aggregate foreign account value top $10 at any point, you must file the FBAR, period, full stop.
So that belief, I don't owe U.S. tax, so I don't have any U.S. filings, totally wrong for FBAR.
Totally wrong, and a very costly mistake to make.
What about married couples? If you file taxes jointly, do you file FBAR jointly?
Not necessarily. You can file a joint FBAR, but there's a specific condition. You can only file jointly if both spouses have ownership, usually joint ownership, over all the foreign accounts being reported on that FBAR.
So if one spouse has a separate account somewhere.
Then you can't file jointly. If spouse A has an account only in their name and spouse B has one only in their name and they also have a joint one, then spouse A has to file their own FBAR reporting their separate account and the joint one. And spouse B has to file their own FBAR reporting their separate account and the joint one.
Wow. Okay. So joint tax return doesn't equal joint FBAR. Depends entirely on how the accounts are titled.
Exactly. It's about the ownership or authority over the specific accounts.
And that brings us back to beneficial ownership or signature authority. Forgetting about those must be common too.
Very common. People focus on, is my name on the account as the owner? But like we discussed, if you benefit from an account held by, say, a foreign company you own, or if you have that signature power to control the money, even if it's not legally yours, you likely have a reporting requirement for that account. Forgetting that technicality means accounts get missed.
Okay, and the last common mistake mentioned, not filing after you've closed an account. That seems weird.
It does seem counterintuitive, but it catches people.
Yeah.
The FBAR reports on accounts during the calendar year. So let's say you had an account, its peak value during the year helped push your total over the $10,000 threshold.
Yeah.
But you close that account in, say, November. You still have to report that account to the FBAR for that year because it existed and met the criteria during the reporting period.
Even though it's gone by December 31st.
Even though it's gone. The filing obligation is triggered by its existence and value during the year, not just at the very end.
Man, lots of ways to slip up unintentionally.
There really are.
Okay, this is where things often get really tangled for people. FBAR versus FACA Form 8938. They both sound like they deal with foreign assets. How are they different? Because you might need to file both, right?
Yes, you might need to file one or the other, or, quite commonly, both. And they are distinct. FACA, that's the Foreign Account Tax Compliance Act. It came along later, 2010. Form 8938, the Statement of Specified Foreign Financial Assets, is the main form individuals use for FACA reporting.
Okay, so FBAR is FinCEN under the Bank Secrecy Act. Form 8938 is IRS under FACA, two different regimes.
Exactly. Think of them as separate tracks with different rules. Let's break down the key differences our sources point out.
Yeah, let's make this crystal clear.
Okay, first, where you file them. This is a big practical difference. FBAR, FinCEN 114, goes electronically straight to FinCEN through their BSAE filing system. You do not attach it to your tax return.
Okay, separate filing.
Form 8938, on the other hand, is an IRS form. You file it with your annual Form 1040 income tax return. It's an attachment.
Got it. FBAR to FinCEN, 8938 with your 1040 to the IRS. What about what you report?
FBAR focuses on foreign financial accounts. Form 89938 reports specified foreign financial assets. That includes accounts, yes, but it's broader. It could also include things like foreign stocks or bonds held directly, not in an account, interest in foreign partnerships, certain foreign debts. So 8938 covers a potentially wider range of asset types.
Okay, so 8938 is accounts plus potentially other assets. What about the money thresholds?
This is another huge difference. FBAR has that single, relatively low threshold, aggregate account value over $10,000 at any point in the year.
Simple enough.
Form 838 thresholds are much higher, and they vary. They depend on your filing status, single, married filing jointly, etc., and whether you live inside or outside the U.S.
Oh, complex.
Yeah. For example, a single person living in the U.S. might only need to file Form 8938 if their specified foreign assets are over $50,000 on the last day of the year or $75,000 at any point. But for a married couple living abroad filing jointly, the threshold could be way up at $400,000 on the last day or $600,000 at any point.
Wow, much higher numbers for 8938. So you could easily need to file FBAR, but not Form 8938.
Very easily. Or, if your assets are high enough, you can need to file both.
Okay, what about extensions?
We covered FBAR, automatic extension to October 15th, and that's it. For Form 8938, there's no automatic extension just for that form. Because as part of your tax return, you only get an extension for 8938 if you file for a general extension for your entire income tax return, usually using Form 4868. That typically gives you an extra 6 months for the whole return, including the 8938.
Got it. Automatic for FBAR to October 15 need a tax extension for 8938. And penalties.
They differ too, and this is where we get into the recent court battles we'll discuss. FBAR non-willful penalties start at $10,000 per violation, and we'll talk about what per violation means. Willful FBAR penalties can be enormous, the greater of $100,000 or 50% of the account balance.
What?
Form 18938 penalties start with a $10,000 penalty for failing to file. If you keep failing after the IRS notifies you, they can add another $10,000 for each 30-day period, up to a maximum of $50,000 more. So potentially $60,000 total for continued failure on 18938.
Okay, different penalty structures too. The main takeaway seems to be they are separate filings, different rules, different thresholds. Meeting one doesn't satisfy the other.
Exactly. If you meet the requirements for both, you absolutely have to file both. One for FinCEN, one for the IRS, no shortcuts.
Okay, so you figured out you need to file the FBAR. You know the deadline. You know it's separate from 8938. What's the actual filing process? Is it a paper form you mail in?
Nope, it's all electronic now. The FBAR FinCEN Form 114 must be filed using the BSA e-filing system.
Which you find on FinCEN's website.
That's right. FinCEN's website has links to the system.
Is it complicated, like using tax software? Or more like a government portal?
It's a government portal. For individuals filing their own FBAR, there's usually a no registration option. You can basically access the form, fill it out online, or download it, fill it out offline, and then upload and submit it without needing to create a permanent account.
Okay, that sounds relatively straightforward for an individual.
It can be, but tax pros, CPAs, attorneys, enrolled agents who file FBARs for their clients, they generally have to register with the system, get a user ID, password, all that.
Makes sense. What info do you need to have ready before you sit down to file?
You need the details for every single foreign account you're reporting. That means the name of the bank or institution, their address, the account number, what type of account it is, bank, securities, whatever.
Right.
And the crucial part we discussed, the maximum value the account reached during the calendar year you're reporting on.
The peak value.
The peak value. And you generally need to convert that into U.S. dollars. FinCEN usually tells you which exchange rate to use, often the Treasury Department's rate for December 31st of that year.
So you definitely need to gather that maximum balance info for every account beforehand. That sounds like the trickiest part.
It can be, especially if you have many accounts or didn't track it during the year. And if you get stuck while you're trying to file.
Yeah.
FinCEN does provide resources. They have a regulatory helpline number you can call for assistance, specifically with completing and filing the FBAR through their system. That contact info is on their website. Given the penalties, it's definitely worth getting help if you're unsure.
Definitely. Okay, now let's pivot to where things have gotten really interesting and maybe a bit alarming recently. The legal side. FBAR penalties. There's been a ton of court activity, right? Cases going up to the Supreme Court even.
Absolutely. The legal landscape around FBAR penalties has been incredibly dynamic. We're seeing courts grapple with how to interpret parts of the Bank Secrecy Act's penalty rules in ways that just weren't tested as much in the past.
And it highlights how seriously the government is taking enforcement now?
For sure. And some of these cases are raising fundamental questions, even leading to suggestions that maybe Congress needs to step in and rewrite parts of the law for clarity.
Okay, what's the biggest issue? The one causing the most debate and reaching the highest court?
It's the non-willful penalty. The basic penalty if you mess up, but didn't do it intentionally or recklessly. The law caps this penalty at $10,000. But the huge question is, $10,000 per form you failed to file, or $10,000 per account you failed to report.
That difference could be enormous.
Astronomical.
Right.
Imagine someone didn't file one FBAR, but they should have reported, say, 15 small foreign accounts. Is the maximum penalty $10,000 total per form, or is it 15 times $10,000, so $150,000 per account?
Wow. What has the government argued?
The government has consistently pushed for the per-account interpretation. Their view is that the violation isn't just missing the paperwork deadline, it's failing to disclose each specific account that should have been on there. Each unreported account represents a failure that hinders their ability to track potential illicit activity.
So 15 accounts missed means 15 violations, potentially 15 penalties, up to $10K each.
That's the government's position for non-willful failures.
But the courts haven't uniformly agreed.
Not at all. This created what's called a circuit split, where different federal appeals courts came to opposite conclusions. This is a major reason the Supreme Court had to get involved.
Okay, tell us about that split. Which cases show the disagreement?
Well, you had the Ninth Circuit Court of Appeals and a case called United States v. Boyd. They looked at the law and sided with the taxpayer. They said the statute talks about a penalty for a violation related to filing the report. It didn't explicitly say per account for non-willful penalties. So they concluded the $10,000 cap applied per form no matter how many accounts were missing from it.
Okay, Ninth Circuit, perform.
But then you had the Fifth Circuit Court of Appeals in the United States v. Bittner. Mr. Bittner had many accounts, didn't file for years. The Fifth Circuit looked at the same law and came to the opposite conclusion. They sided with the government, saying the structure and purpose of the Bank Secrecy Act meant the failure to report each account was a distinct violation. So they ruled the penalty applies per account.
Fifth Circuit, per account, direct conflict.
Direct conflict. And there's another case, Kaufman, in a district court in Connecticut, that also went with the perform interpretation. They worried that a per-account penalty for a non-willful mistake could sometimes be unfairly harsh, maybe even more than a willful penalty in weird situations, or hit someone with lots of tiny accounts way harder than someone with one huge account.
So this disagreement between major courts basically forced the Supreme Court's hand.
Exactly. You can't have federal law mean one thing in California, Ninth Circuit, and the opposite in Texas, Fifth Circuit. So the Supreme Court agreed to hear the Bittner case. They heard arguments back in October 2022, specifically to resolve this perform versus per account question for non-willful FBAR penalties.
And the decision in Bittner will set the rule nationwide.
Correct. Their ruling will be the final word on how that non-willful penalty is calculated.
What were the core arguments presented to the Supreme Court? Why per account versus why perform?
The government's per-account argument leans heavily on the BSA's goal, fighting financial crime. They say each hidden account is a problem, makes investigations harder, costs more. A per-account penalty better reflects the scale of the non-disclosure and acts as a stronger deterrent, especially for people trying to hide many accounts.
Okay, and the other side, the perform argument.
That side focuses intensely on the specific words Congress used. They point out that the law does use per-account language for the willful penalty calculation, but doesn't use it for the non-willful one. They argue that difference must be intentional. The violation, they say, is failing to file the required report, not failing to list every item perfectly. They also bring up fairness. Could a simple mistake on many accounts lead to a penalty totally disproportionate to the actual offense?
The difference in outcome is just massive, especially for someone who genuinely didn't know.
It's life-changing. A $10,000 mistake versus potential six-figure mistake for the same oversight. Interestingly, one academic source we looked at actually recommended the Supreme Court go with per account, arguing it's fairer in terms of taxpayer equity penalizing based on the number of hidden accounts and deters better. But they acknowledge the challenge in interpreting the statute's current wording. So everyone's waiting on that Bittner decision.
Okay, beyond the huge perform per account question, there's another challenge people have tried. Arguing the penalties themselves, especially the big willful ones, are just too high, that they violate the Eighth Amendment's ban on excessive fines. How has that played out?
This has been another active area. The key legal question here is whether FBAR penalties are considered punishment. The Eighth Amendment's excessive fines clause only applies to penalties that are punitive, not ones that are considered remedial.
Remedial meaning?
Meaning they're intended to compensate the government for harm or costs, rather than just punish the wrongdoer. Think of it like making the government whole for the trouble and expense of finding the hidden money and enforcing the law.
So have taxpayers succeeded in arguing these huge FBAR penalties are excessive punishment?
Generally, no. Courts have pretty consistently sided with the government on this. In cases like Landa, where the penalty was 50% of the account value, millions of dollars, the taxpayer argued it was excessive. But the courts tend to look at these like civil tax penalties, which are usually seen as remedial.
Was there a definitive ruling on this?
Yes. The United States v. Toth case tackled it directly. Mrs. Toth faced a large willful penalty and argued it violated the Eighth Amendment. The First Circuit Court of Appeals flatly said, no, civil FBAR penalties are not fines subject to the excessive fines clause. They found the penalties serve that remedial purpose, offsetting the government's high costs for investigation, audits, enforcement related to these hidden accounts. They're meant to make compliance worthwhile and cover the government's expenses.
So the courts see even multi-million-dollar FBAR penalties as basically cost recovery for the government, not punishment.
That seems to be the consistent legal interpretation based on the sources. Because they're deemed remedial, the Eighth Amendment argument hasn't gained traction. And that academic paper suggested the Supreme Court in Bittner might even reinforce this by explicitly labeling FBAR penalties as remedial, just to settle the matter definitively.
Okay, another really important practical question the courts have addressed. What happens if someone owes FBAR penalties, but then they die? Can the government go after their estate?
Critical question for estate planning and administration. And maybe predictably by now, it comes back to that same distinction. Are the penalties remedial or penal?
Because remedial debts generally survive death, but punishments don't.
Exactly. That's the common law principle.
Yeah.
And the courts, looking at FBAR penalties, have concluded they are remedial.
So they do survive death.
Yes. Cases like United States v. Estate of Schoenfeld, involving willful penalties, and United States v. Gill, involving non-willful penalties, both reach the same conclusion. The FBAR penalty obligation survives the death of the taxpayer. The courts reasoned that since the penalties are meant to compensate the government for costs and encourage compliance, the obligation doesn't just disappear when the person dies.
Wow. That means an estate could be significantly reduced or beneficiaries could lose out because of the deceased person's unpaid FBAR penalties.
Absolutely. It becomes a debt of the estate that needs to be dealt with. This is why some sources recommend much clearer communication about this. Things like adding specific warnings about FBAR penalties surviving death to the instructions for the estate tax return, Form 706, or IRS guides for executors so people settling estates are aware of this potential liability.
Okay, one last major litigation point. Collection. Let's say someone owes millions in FBAR penalties, but all their money is sitting in, say, a Swiss bank account. Can the U.S. government actually force them to bring that money back to the U.S. to pay the penalty? Can they reach assets overseas?
This is about the government's reach. Can they make you repatriate foreign assets? A DOJ official apparently predicted we'd see more cases trying to do just that, and we saw it tested in the United States via Isaac Schwartzbaum.
What happened in Schwartzbaum?
Mr. Schwartzbaum owed a huge amount, over $12 million in FBAR penalties, a mix of willful and non-willful. He didn't have enough assets in the U.S. to cover it. So the government went to the U.S. court and asked for an order telling him to bring his assets back from Switzerland to pay the debt.
And his argument was basically, you can't touch my Swiss money from a U.S. court.
Pretty much. He argued the U.S. court didn't have jurisdiction over assets physically located in another country.
But the court disagreed.
The court disagreed strongly. They ruled that the key wasn't where the assets were, but whether the court had jurisdiction over Mr. Schwartzbaum himself. Since he was the taxpayer subject to the U.S. court's authority, the court could order him to take action regarding his assets, wherever they were. They could compel him to repatriate the funds.
So the message is, hiding assets overseas won't protect them from FBAR penalty collection if the U.S. government gets a judgment against you.
Exactly. If they can get jurisdiction over the person, they can order that person to bring the money back. It confirms the government has powerful tools to collect these penalties, regardless of where the underlying assets are held. Again, the recommendation is clearer communication about this broad collection power.
Okay, so we've seen the complexity, the potential for huge penalties, even for mistakes, and the courts upholding strong enforcement. Given all that, how can the system be improved? What do the sources suggest to actually boost compliance so people don't get into this mess in the first place?
Well, the current system is definitely seen as complex. One source even mentioned hidden identifiers, like that little checkbox on Schedule B of the tax return about foreign accounts.
Yeah, the one asking if you have foreign accounts.
Right. And apparently, in some cases, like one called Horowitz, just checking no on that box, even if the person claimed they just didn't understand FBAR, was used as part of the evidence arguing their failure to file FBAR was willful.
Wow, so even a missed checkbox can contribute to proving intent.
It shows how easily things can be misinterpreted. Relying on just that isn't enough. So one really strong suggestion coming from the sources is to create a tax preparer penalty, specifically for FBAR.
Meaning, penalize the CPA or tax advisor if the FBAR isn't filed.
Potentially, yes. Right now, all the penalty risk is on the taxpayer. If preparers also had some skin in the game, they'd have a much stronger incentive to ask detailed questions about foreign accounts, maybe use specific checklists, get clients to sign off confirming they've disclosed everything. It could really improve diligence.
That makes sense. What about making the requirement itself more visible?
Absolutely crucial. A key recommendation is to put a clear, simple question about foreign accounts right on page 1 of Form 1040.
Like they did with the virtual currency question.
Exactly like that. Make it impossible to miss for anyone filing a standard tax return. Way more effective than burying it on Schedule B, which not everyone even uses.
And improve the instructions, too.
Definitely. The instructions for Schedule B Part 3 should have a big, bold, what's new, or alert section, specifically calling out the FBAR requirement, explaining it separate, hitting the threshold, mentioning the penalties, just making it much clearer right where the current easily missed question is.
What about regular reminders?
Yeah, the IRS could issue annual notices during tax season. Just a blast to preparers and maybe taxpayers reminding them, hey, remember FBAR? Deadline is April 15th, automatic extension to October 15th. Penalties are serious.
And maybe specific notices for estates.
Good point. Given that penalties survive death, sending out specific annual reminders targeted at estate administrators and their advisors could be really helpful. Reminder, check for FBAR compliance for the deceased. The estate could be liable.
Okay, and the last big improvement idea, dealing with the FBAR Fax Form 8938 overlap.
Yes, this comes up a lot, having two separate forms, different agencies technically, different thresholds, different rules.
Yeah.
It's just confusing and burdensome for people who have to file both.
Didn't the GAO point this out years ago?
They did. The Government Accountability Office issued a report back in 2014 highlighting the duplication and compliance challenges. So a major recommendation, maybe the holy grail for simplification here, is to somehow consolidate them. Ideally, move to one single form or reporting system that captures all the foreign account and asset information needed for both BSA and FOTICA purposes.
That would make life so much easier for taxpayers.
Hugely easier.
Yeah.
And it would probably reduce errors and improve overall compliance just by simplifying the process.
Okay, so let's wrap this up. What's the bottom line for our listeners from all this?
The biggest takeaway. If you are a U.S. person, citizen, green card holder, even some U.S. entities, and you have any kind of financial account outside the United States, you absolutely must figure out if you have an FBAR filing obligation.
Even if the account seems small, even if you don't owe U.S. tax.
Especially then. It's a separate reporting requirement. It's not about tax liability. It's about transparency under the Bank Secrecy Act.
And getting it wrong, even by accident, is no small matter.
Not at all. The penalties for non-willful failure, just not knowing or messing up the threshold, can be substantial. We're still waiting on the Supreme Court for the final word on per form versus per account for non-willful, but it could potentially be $10,000 per account per year.
And the courts are backing up the government's enforcement stance.
They really are. Challenges based on penalties being excessive fines under the Eighth Amendment, largely unsuccessful because courts see them as remedial. Do the penalties survive death? Yes. The estate is on the hook. Can the government make you bring money back from overseas to pay? Yes, they can compel repatriation.
So the complexity, the severe consequences, the overlap with FACA, it all screams for more awareness, more careful reporting.
And hopefully some simplification from the government side eventually, whether it's that single form, clearer instructions, maybe the preparer penalty, nudging diligence. Something needs to bridge the gap between the government needing this info and taxpayers actually understanding their duty to provide it.
So for you, the listener, if you have any international financial ties, the best defense is being informed. Understand these rules. Get professional help if you're even slightly unsure, because the cost of getting FBAR wrong can be truly immense.
And maybe here's a final thought to leave you with. We live in a world where money moves globally, digitally, almost instantly. Assets like crypto blur the lines of location and account types. Is this FBAR system, rooted in 1970, really equipped to handle modern finance effectively and fairly? Or will it continue to rely on catching people after the fact with potentially devastating penalties, simply because the rules are complex and awareness is low? Something to think about.
That's our deep dive for today. We really hope this exploration into the critical, complex world of FBAR has given you some valuable insights.